All right, let's talk about credit cards. Yes, those little rectangles of plastic that you use to buy everything from a sensible four-door sedan to a slightly less sensible life-size cardboard cutout of Danny DeVito. We all have them. We use them, we sometimes abuse them, and we definitely pay for them. But here's the thing, the real secret. The juicy little tidbit the banks hope you never, ever figure out. That card is not just a simple payment tool. It's a treasure chest, a Swiss Army knife of financial perks, a secret weapon. And the banks? They've conveniently forgotten to give you the instruction manual. Think about it. When was the last time your bank called you up and said, "Hey, just a friendly reminder, you can get your money back for that toaster you bought that now only makes lukewarm bread because of our hidden price protection policy"? Never. So, what is a credit card? At its most basic, it's a loan, a very, very convenient loan. When you swipe that card, a bank is essentially spotting you the money for your purchase. "I'll take this giant inflatable flamingo now. I pinky promise to pay you back later." In return for this convenience, the bank hopes for one of two things. Either you pay them back on time, and they make a small fee from the merchant, or you don't pay them back on time, and they hit you with interest rates that would make a loan shark blush. It's a beautiful system if you're the bank. Most people use their credit cards for exactly that. Convenience. Emergencies. Your car breaks down? Credit card. Your refrigerator dies? Credit card. That limited edition collectible spoon set you absolutely must have? Credit card. We treat it like a safety net or a tool to delay payment. And the banks are perfectly happy with this arrangement. They've marketed these things for decades as a simple buy now, pay later proposition. Because the simpler it seems, the less likely you are to ask questions. The illusion, the card's only function is to spend money. And tonight, we're pulling back the curtain. Let's dive into the good stuff, the secret perks. First up is something called purchase protection. Imagine this. You buy a brand new, shiny laptop. You unbox it, your cat knocks it off the table. It shatters. Many credit cards offer purchase protection, which means if an item you bought with the card is damaged, stolen, or lost within a certain period, usually 90 to 120 days, the credit card company will refund you or replace the item. Next on our list is the extended warranty. You know how the cashier tries to upsell a pricey 2-year warranty? You can politely decline. Most major credit cards will automatically extend the manufacturer's warranty on eligible items. So if your TV has a 1-year warranty, your card might add another full year for free. You just saved $80 and got to feel superior to a retail employee. Win-win. Then there's price protection. Buy $200 headphones and they drop to $150? File a claim and the card issuer may refund the difference. Free money for a few minutes of work. Some cards offer return protection. If a merchant won't take back an eligible item, the card company might refund you anyway. It's the ultimate, I'd like to speak to the manager power. The manager is your credit card company. Those are the hidden protections. But travel perks are where these cards get really interesting. Let's go there next. Let's go there. Now let's talk about travel, because this is where the hidden perks get truly spectacular. People spend hundreds on travel insurance, but you might already have it for free. Many premium, and some not so premium, cards include travel insurance benefits. Trip cancellation insurance, covered reasons like sudden illness or family emergency. Lost luggage? Airlines may offer little, but your card may pay up to $500 for essentials. For clothes, toiletries while you wait. If your flight is delayed for hours, some cards reimburse hotel and meals. Suddenly, a delay can become a mini paid-for stay. And the holy grail, rental car insurance. They sell collision damage waiver at $20 $30/day. Panic-inducing upsell. But if your card offers primary coverage, pay with that card and politely decline the counter upsell. Primary means it pays first. Secondary pays after your insurance. Big savings on a week-long rental. Premium cards also include concierge services, a 24/7 personal assistant to book restaurants, tickets, and travel plans. Hard to get reservations or sold-out tickets. Call the number on the back of your card and let them do the work. It sounds like spy movie stuff, but it's real for many cards. It's the kind of benefit that makes you feel like you're beating the system, one dinner at a time. Okay, we've covered protection and insurance. Now the most visible part, rewards. Rewards, cashback, points, and miles. Cashback is the simplest. Spend money and get a percentage back. Usually 1 to 2% on everything. Low effort, steady return. Sometimes up to 5% on specific categories like groceries or gas. Groceries, gas. Points and miles are more complex, but can be much more lucrative. Redeem for flights, hotels, gift cards, or statement credits. 50,000 points could be a $500 statement credit, or transferred for a $3,000 business class flight. Check the math. That's checkers versus chess. Strategy. Category bonuses. Use a card for dining, one for groceries, another for travel. Use the right card for each purchase. Don't forget shopping portals. Click through your card's portal before buying. Partners like Nike, Apple, Target often offer bonus multipliers. 5 extra points, 10, 15, 30 seconds of clicking can double or triple your rewards. It's free money. Use it. Now the king of rewards, the sign-up bonus. It's a flashy welcome mat made of cash. They offer a huge pile of points or $200 cash back if you meet the minimum spend. Apply, spend the required amount in a few months, and collect the bonus. Typical minimum, $3,000 in 3 months. For the bank, this is a loss leader. They hope you stick around. They want you to stay and carry a balance. We aim to prove them wrong. Meet the minimum spend, collect the bonus, then reap the benefits. Don't buy a jet ski just to get points. Time your application around planned large expenses. New tires, tuition, or home repair are perfect opportunities. A warning, there are rules. Banks aren't stupid. Rules like 5/24 means some issuers won't approve you if you opened 5 or more cards in 24 months. Be strategic. Plan which cards to get and when. And the most important rule, pay your bill in full every month. Always. If you carry a balance, interest will devour your rewards. Have a plan, execute, grab the loot, and get out clean. You are the Danny Ocean of your personal finances. All right, we've had our fun with freebies. Now the dark side, fees and interest. This is where the banks make their real money. The number one enemy, the annual fee. Fancy travel cards can charge $95 or $695 a year. Make sure the card's perks deliver more value than the fee. If a $95 card saves you $240 in check bag fees, it's worth it. But the real monster is APR. The interest you pay if you don't pay in full. 18%, 25%, sometimes pushing 30%. Brutal. Carrying a balance is like filling a bucket with a hole. Interest drains your money. Rule: avoid paying interest. Pay your statement balance in full every month. No exceptions. If you're already in debt, balance transfers can help. Many cards offer 0% intro APR for 12 or 18 months to pay down balances interest-free. There is usually a one-time fee, typically 3-5%, often less than what interest would cost. Compare the fee to future interest. It's often a smart move. Don't be afraid to call and negotiate. Annual fee waivers, retention offers, or a rate reduction. The worst they can say is no. Often they'd rather keep you as a customer. Ask. Let's talk about your credit score, that mysterious 3-digit number. It's a grade on how good you are at borrowing and paying back. It affects car loans, mortgages, and renting apartments. They try to make it sound complex. It's actually simple. Pay on time, keep utilization low, keep accounts long. Payment history is 35% of your FICO score. Pay on time every time. Set up autopay and calendar reminders to avoid late payments. One late payment can tank your score and stay on your report for 7 years. Credit utilization is next, about 30% of your score. Keep it under 30%, ideally under 10%. If you have $3,000 balance on a $10,000 limit, that's 30% utilization. Ask for a credit limit increase. $10K to $20K makes utilization drop without changing spending. Your score can rise with that single move. Length of credit history is 15% of your score. Keep your oldest cards open. Put a small recurring charge on old cards and set autopay to keep accounts active. Payment history is the foundation. Keep utilization low and history long. Do those things and your credit score will work for you. So there you have it. Your credit card is not just a tool for buying things you can't afford. It's a secret agent in your wallet, equipped with gadgets you never knew you had. A free insurance policy, a personal travel agent, a warranty extender, and a money-making machine. Banks loaded cards with value and count on you never learning to unlock it. Your mission? Flip the script. Treat cards as tools to optimize, not debt sources. Read your card benefits guide. You might be sitting on a goldmine. Use the right card for the right purchase to maximize rewards. Time your applications to match planned expenses and snag sign-up bonuses. And above all, pay in full every month to avoid crippling interest. Now, my single best insider tip. Pay your credit card bill twice a month. Pay once on the due date to avoid interest, and once a few days before statement close. The balance reported to bureaus is the one on the statement closing date. Lower your reported balance to near zero before it's reported. Supercharge your score for free. Now go get them. Use these secrets. Keep the rules in mind and win their game. Read the benefits, use the right cards, pay strategically. Knowledge is money. Subscribe for more tips.